Today, we saw the NASDAQ making another new all-time high. Tesla making another new all-time high. Broadcom absolutely crushing it out there, up 11%. However, has Broadcom gone too far? Is this parabolic move about to come back lower as we're starting to see downgrades of Broadcom after these recent movements? Now, we come over and look at how the indices fared across the board. The Dow had another down day, down 110 points. The NASDAQ was up 247 points. S&P 500 being up 22 points. Russell 2000 being down 1.42. Now, when we look at advancing issues versus declining, we actually had more issues declining on the day. We had 49.5% of issues declining on the day. So let that sink in. When you think everything is fine, the NASDAQ is screaming to new all-time highs. Everything is great. Come on in. The water is warm. Look at the sectors out there. Only 3 of the sectors actually perform relatively well. 2 of them, financials and industrials, barely in the green. The rest of the sectors were in the red today. The big laggard out there today was energy. And speaking of energy, notice crude oil had a down day, but where's it coming back towards? Right towards the upper part of this consolidation area that we've been stuck in for several weeks. Now, when we look at the fear and greed index, right now we can see we're at greed, and that is a pretty substantial jump from the prior close. Previously, we closed at 50, dead smack in between fear and greed. Now, here's another question we got to ask ourselves. The stock market is up 27% ahead of the final meeting from the Fed, but is a correction overdue? We all know a correction is coming at some point, and we're starting to see more and more signs of divergence. And what I mean by this is, look at the daily chart for the SPY. Notice we have this upper level consolidation where right near all-time highs, but then we come over and look at the RSP, for example. Look, we've had 11 days where we closed lower than where we opened. One of these days was an inside day, but every other day was essentially red. MACD indicator on this chart is extremely bearish at this moment as well. So what is really running the markets? Well, like we said earlier, Tesla making new all-time highs. We have AVGO, massive new all-time highs. We look at Google making another new all-time high. We look at Amazon making another new all-time high. So we have a select group of stocks, which essentially is the Mag 7 plus a couple more, basically contributing to the market screaming on the way up. Now, this afternoon on the live stream, we gave a poll and I said, which one is lying? Will the S&P pull back or will it be the VIX? All day long, we saw the VIX rally up and basically hold this upper level consolidation. Then going into the close, what do we see? We see the VIX go ahead and start sprinting up higher. Now, could the movement in the VIX be nothing more than traders trying to hedge ahead of the next FOMC meeting, which is going to come out on Wednesday? Or is this showing us that there's actually problems in paradise? We look right over here at this article right here. The biggest owners of US stocks has never been so long. And this kind of has me a little bit concerned as well, because what it goes on to show is households have the largest holding of stocks out there. And if we think about that, who is usually left to hold the bag? Is it the big institutions or is it the retail trader? I think we all know the answer to that. Now we look right here, Tesla stock climbs nearing 1.5 trillion in value. And we come over and we go back over and we take a look at Tesla stock real quick. Notice we look out here on the monthly chart. We can see Tesla absolutely rocketing on the way up, and it's just starting to get parabolic at this moment. Every candle just going up and up and up at a much steeper ascent, and that is going to be problematic. There will be a day of reckoning at some point. Now, as we come over and look at the economic calendar for tomorrow, what is in store? 8:30 a.m. we have the core retail sales. Then on Wednesday, what do we got? Building permits at 8:30. Then it's going to be time for Papa Powell to take the podium. Now, speaking of Jay Powell, there's a 97% chance the Fed is essentially going to cut rates by 25 basis points at the next FOMC meeting. But let me ask you guys this question real quick. If we see a lot of stocks in the stock market as a whole at or near all-time highs, why does the Fed need to go ahead and cut rates? Is it because they already know something is broken? Now, as we come over and look at the NASDAQ real quick, you can see we're basically closing in the upper third of the range. And with that being said, we have a majority of the volume a lot lower than where we're currently at. Now, we have 2 days of back-to-back gaps, which we have not come back and filled. On the 4-hour chart, MACD indicators still look strong. On the 1-hour chart, MACD indicators still look strong. On the 30-minute chart, we now see the MACD indicators starting to roll over, and we can actually see these 2 back-to-back gaps which have not been filled. Now, tomorrow would be a gift if we have another day where we actually gap up higher. Today was essentially a trend day. Every single candle just kept going higher, higher, higher. Finally, the last 30-minute candle, we were able to close below the prior candle's low. Before that last 30-minute candle, every candle closed greater than the prior candle's close. Now, as we look at the volume profiles over here, not a lot to be seen. We have a P as in Paul shaped profile, but value area low is so low down here at 535.51. If we do get below that, I would look down here for gap support. Below that, look for the gap to be filled. Then maybe look down for the gap from Friday to potentially come back and get filled. I want to make everybody aware there's 1 day left to take advantage of Apex's 80% sale off all their evaluation accounts. Past in as little as 1 day, $125 activation fee across all account sizes. If you'd like to take advantage of this offer, use the link in the description box down below as well. Now, when we come over and look at the futures markets real quick, we take a look at the NASDAQ. And before we actually talk about the NASDAQ real quick, now, before we look at the NASDAQ futures, keep in mind, depending on if you rolled your contract over or not, you could be seeing different values. So I want to talk about this real quick. We can see the March contract had less volume than the December contract. However, tomorrow, I think that's greatly going to change out here in the NASDAQ. And when we come over and look at the S&P 500, we can see the March contract already has more contracts than what was on the December contract. Me personally, I've already rolled over. So as we start to talk about some of these volume profile levels, just know they are going to be relevant for the March 2025 contract. Now, on the 4-hour chart, we talked about this ABC pattern today on the live stream. And if you guys want to make sure you don't miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. But what we essentially seen is we smashed through the ABC target, making it almost all the way up here towards the 127 extension. Now, if we look over here on the composite profile, the volume is very, very thin, which makes it very susceptible to coming back and kind of filling in this area. Then as we come over and look at the daily profiles, this is the area that I was looking to target on the live stream this afternoon. Now, as we look at the profile, we have value area high up here at 22,450. We have the point of control at 22,410.50 with value area low coming in at 22,253.50. Now, as I look at this, we don't have a lot of minus development areas. There's that one slightly below us, which is going to come in somewhere around 22,383. But below that price point, I really want to open the door and say, okay, how far could we potentially go to the downside? And for that, I want to measure this last straight leg on the way up. Notice the 38% retracement comes in at 22,308. That would be considered a very minor retracement and what could still be a very bullish move in this market. However, I think as we get closer to the Fed coming out, the market's going to start to get a little bit more nervous. Now, as we come over and look at the SPY, you can see we have this upper level consolidation nearing all-time highs. We also have this ABC pattern to complete up here at about 616.38. Then on the 1-hour chart, just a rocket ship up today. We look over here on the 30-minute chart and start to see the roll effect of the MACD indicator. Now, we do have a minus development area slightly above us, which is going to be anywhere from 607.05 to about 607.30. Keep your eye tomorrow on this gap potentially coming back and being tested. What I mean is gap support. And if we break below that, look for the gap to come all the way down here, potentially being filled. Then as we come over and we start looking at the futures markets real quick, notice we came right up towards this high volume area today, which is an area we talked about in the pre-market prep part of the live stream. And then we started to get a rejection on the way down. So is the market going to form some type of consolidation here, waiting for the outcome for what Jay Powell has to say during the FOMC? We also have multiple untested point of controls below us. The first one being 6,082.5. And if you look at the volume profile, notice we've rotated all the way above value area high off the weekly, and now we're back down below value area high. So from a weekly standpoint, I would be looking for lower prices unless we can get back above 61,054.5. Now, when we come over and start looking at the daily profiles, we have a minus development area slightly above us, which is really going to come in somewhere in the ballpark of 61.55 up here to about 61.57. Now, I exited a trade this afternoon right around that area. Looking back, I wish I would have held that out a little bit longer. We look at value area high, that's going to come in right here about 61.56. Point of control is just slightly lower at 61.54.25, with value area low being all the way down here at 61.41.75. Now, as we look at this, we always want to pull our fib of the last move on the way up. As we see this, we're almost down at the 50% level. We know from experience, we know from the past that S&P loves to retrace 50% of the move. So is this time going to be any different? Probably not. And maybe we overshoot it and we go even a little bit further. However, where I really start to get concerned about the S&P going higher would be if we start breaching the 78.6 level at 61.34.5. then I'd be a little bit more concerned. We're going to undo the entire move and potentially start to go lower, maybe even trying to target this high volume area down here at about 61.29, then maybe into this minus development area about 61.13. Now, as we come over and look at the dollar index today, basically a candle of indecision, not a lot to be seen on that front. We take a look at gold. Gold's been suffering the last three trading sessions. Today, closing out here with a doji candle. This is the area for gold, make or break. Can we break back above this high volume area of the profile, then start working our way up towards that ABC target to the upside? If not, there's going to be problems up ahead. We come over and look at the diamonds and look at how many consecutive down days we've had in the Dow. We've had 1, 2, 3, 4, 5, 6, 7. Today was number 8 of consecutive days down. Now, with that being said, I would expect within the next couple of days, we're going to see some type of bounce out of the Dow, whether it be 1 day, 2 day, 3, or even all the way back up towards all-time highs. A bounce is going to be in the cards in the very near future. Coming over and look at the Russell 2000, you can see we've closed out some of these gaps. There's still a gap a little bit lower down here at about 230.99. Now today, the Russell was actually able to close up. So we'll see, can the Dow follow suit with the Russell today? Like the Russell did today, having a somewhat of a green day. However, on the daily chart, the MACD still looks bearish, good separation of the lines, and we're not quite yet at the zero lines. Now, what I'd like to see is go ahead and pull a Fibonacci retracement from the swing low up here to the swing high. This is an area where we must see the Russell 2000 start to turn. If we breach below the 78.6 at 230.33, watch out, we're probably going to go substantially lower. Now, if you'd like to learn the pros and cons of Take Profit Trader, make sure to watch this video right here.